Cash is no longer king, and even digital banks might not be safe. As AI becomes smarter and crypto grows more powerful, the entire banking system is facing a major shakeup. Imagine a future where algorithms manage your money, crypto replaces your wallet, and middlemen like banks become obsolete. Sound far-fetched? It's already happening. In this video, we'll explore how artificial intelligence and blockchain technology are rewriting the rules of finance, and what it means for your money. Today we will talk about the future of money. Will AI and crypto disrupt banking? So before we start, make sure to hit the like button and subscribe to my channel. 1. Rise of AI in financial services. Artificial intelligence has already begun transforming traditional banking operations. From automating customer service through AI chatbots to using machine learning for fraud detection and credit scoring, banks are becoming more efficient and cost-effective. Predictive analytics enables personalized financial advice, while AI-driven algorithms manage investment portfolios, making financial planning accessible to more people. Legacy systems are being replaced with AI-powered solutions that operate 24/7 and reduce human error. Moreover, AI's ability to analyze massive datasets in real time gives banks a competitive edge in detecting risky transactions and improving security. As these technologies evolve, the human role in banking might become more supervisory than operational. However, while AI introduces speed and personalization, it also raises concerns about data privacy, algorithmic bias, and over-reliance on automation. Still, there's no doubt that the adoption of AI in banking is no longer a question of if. It's happening now and will only deepen in scope. 2. Blockchain, the technology behind crypto. Blockchain is the decentralized ledger technology that underpins cryptocurrencies like Bitcoin and Ethereum. Its potential to disrupt traditional banking lies in its ability to eliminate intermediaries. With blockchain, transactions can be verified, recorded, and secured across a distributed network without a central authority. This transparency reduces fraud, lowers costs, and increases transaction speed. Smart contracts, self-executing contracts with the terms directly written into code, could automate and streamline loan processing, insurance claims, and even property transfers. Decentralized finance, DeFi platforms built on blockchain are already offering lending, borrowing, and trading services without banks. However, scalability and regulatory uncertainty still pose challenges. The traditional financial system relies heavily on centralized control and compliance, which blockchain circumvents. If blockchain can solve its current limitations and gain widespread trust, it could eventually form the foundation for a new global financial infrastructure, one that operates more openly, securely, and efficiently than ever before. 3. Cryptocurrencies as digital assets. Cryptocurrencies are rapidly gaining traction as alternative financial instruments. Unlike fiat currencies, they are decentralized and not controlled by any government or central bank. Bitcoin is often referred to as digital gold due to its capped supply and store of value nature, while Ethereum and other altcoins provide platforms for decentralized applications. Stablecoins like USDC and Tether bridge the gap between fiat and crypto by maintaining a stable value. For individuals in countries with unstable economies or limited banking access, crypto offers a new kind of financial freedom. Cross-border payments become faster and cheaper, bypassing traditional SWIFT networks and currency exchange fees. However, issues such as volatility, scalability, and lack of regulatory clarity still hinder mass adoption. Institutions are beginning to invest in and offer crypto-related products, signaling mainstream interest. As technology matures and legal frameworks evolve, cryptocurrencies may not replace banks entirely, but they could redefine how we save, invest, and transact. 4. AI-powered personal finance. AI is revolutionizing how consumers interact with money. Fintech apps use artificial intelligence to analyze spending habits, recommend saving strategies, and offer real-time alerts. Robo-advisors are providing low-cost investment advice, once reserved for the wealthy, democratizing wealth management. Some platforms even use natural language processing to allow users to ask questions, like "Can I afford to go out this weekend?" and receive tailored financial advice. Banks and credit unions are integrating AI to create hyper-personalized customer experiences, using big data to predict future behavior and suggest relevant products or services. Voice-activated assistants and AI-driven budgeting tools make money management intuitive and interactive. This shift empowers individuals to make smarter financial decisions without needing formal financial education. However, data privacy and security must be tightly managed to avoid exploitation or breaches. As that becomes more embedded in our financial lives, it will act like a personal financial assistant that evolves with our needs. 5. Central bank digital currencies, CBDCs. Governments and central banks worldwide are exploring or piloting central bank digital currencies, CBDCs. Unlike decentralized cryptocurrencies, CBDCs are issued and regulated by central banks, offering a state-backed digital currency alternative. China's digital yuan, the EU's digital euro, and discussions around a US digital dollar reflect the growing momentum. CBDCs promise faster, more secure payments and could enhance monetary policy implementation. They also offer financial inclusion for unbanked populations, especially in developing regions. For central banks, CBDCs provide better control and oversight compared to cash or private cryptocurrencies. But the introduction of CBDCs poses questions about the role of traditional banks. If citizens can hold money directly with a central bank, will they still need commercial bank accounts? While CBDCs are not designed to eliminate banks, they could force a major restructuring of the financial ecosystem. 6. Decentralized finance, DeFi threat. DeFi platforms aim to replicate and improve upon traditional banking services using blockchain technology. These platforms allow users to lend, borrow, earn interest, and trade assets without intermediaries like banks or brokers. Everything is governed by smart contracts, making processes transparent and tamper-proof. Popular DeFi protocols like Aave, Compound, and Uniswap have attracted billions in locked value. The appeal lies in their accessibility. Anyone with an internet connection can participate, often earning higher yields than traditional savings accounts. However, DeFi is still in its early stages and not without risks. Bugs in smart contracts, lack of customer support, and price manipulation make it a high-risk environment. Regulation is also a gray area, with governments struggling to classify and oversee these decentralized entities. Despite the hurdles, DeFi represents a paradigm shift. 7. Challenges for traditional banks. Traditional banks are facing a dual-front challenge, adapting to AI-driven competition and responding to crypto's decentralization. Their legacy systems often hinder rapid innovation, making it difficult to keep pace with agile fintech startups. Banks are also burdened by strict regulatory frameworks, unlike DeFi platforms, which operate with fewer restrictions. Moreover, customer expectations have evolved. People now expect seamless digital experiences, 24/7 service, and low fees. AI and crypto-native platforms deliver these advantages with fewer overheads. To stay relevant, banks must accelerate their digital transformation, collaborate with fintech companies, and invest in blockchain research. Some are already offering crypto custody services or tokenized assets, signaling a willingness to evolve. However, bureaucratic inertia and risk aversion can stall meaningful change. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.